Hello and welcome to our very special programming. This really is the last lap as far as the GST is concerned. The big meeting in Srinagar will perhaps decide on rates, and let's take this straight across to Rajeev Dimri, who's been tracking that meeting very intently all day today and is joining us on the phone line with more details. Thanks very much for being with us, Ruchi. This must be a welcome break away from the New Delhi heat. But how are things picking up as far as this meeting is concerned? I know the finance minister will brief any time now, and we'll go across to him. But help us understand, has there been any sort of a consensus on rates just yet, the fitment?
Absolutely, Supriya, it is definitely a welcome break. But yes, there are a lot of crucial decisions that have been taken in this meeting. As we've been pointing out, that 9 GST rules have been finalized in this meeting, and these rules are to do with composition, transition, valuation, input tax credit, invoice and refunds and returns. As far as the broad issue of fitment is concerned, there was, of course, a lot of give and take between the states and the centre. We understand that around 1,150 goods, the rates for almost 1,150 goods has been finalized in today's meeting. We're not so sure whether the government will make these rates public so far or not after this meeting, but we understand that states in fact have put their foot down on a lot of products that they're seeking exemption on. We understand that states like J&K and Northeast that have a lot of these textile industries are seeking 0% tax rates or exemption for handicrafts, for cotton and silk yarns. We understand that states like UP are 0% tax rate for puja material, and states like Delhi are in fact seeking a 0% or a low tax bracket for low-cost footwear. Well, yes, as we've been saying, a lot of give and take is happening, but the centre is also likely to ensure that the list of exemption remains very small, because they are looking to widen the tax net, and a lot of exemptions will really defeat the purpose as far as GST is concerned. Another big issue, Supriya, here will be what products will all these FMCG goods be taxed at, because it is too big. So we understand that according to the current consensus that has been reached, a lot of these consumer durables and items of daily usage like low-cost soaps could be taxed a lower 5% bracket, but these are the details that we have so far. We will, of course, hear from the finance minister very soon, in about the next 10 to 15 minutes, and we'll, of course, keep you abreast of all the developments from here.
All right. Thanks very much, Rajeev Dimri, for joining in with more details. I've got a whole host of guests joining us on the show as well. Mr. Satya Podar joins us. Mr. Rajeev Dimri joins us. Ms. Bhavna Doshi is joining us. So let's actually keep that conversation going, and also plenty of guests will be joining us over the course of this coverage when the finance minister begins to speak and before. And Mr. Abhishek Rastogi is also with us right here on ET Now. But first up, I would like to quickly go across and get you a view, a slice of reactions and responses that came in from the state finance ministers all day right here on ET Now.
It's perhaps India's largest and most significant tax reform. It's a change in the tax regime itself. And today, to my mind, this is the most important meeting because there's a lot of public interest. So what taxes you'll have on salt, on cigarettes, on ships, so it affects the general public. So it's a very important meeting, and perhaps this is towards the concluding part of the GST Council.
GST को ना लाना तो ये होगा कि हमने खेती तो करनी है, पर हम ट्रैक्टर से नहीं करेंगे, हम बैल से करेंगे। तो ये ज़रूरियात वक्त है हिंदुस्तान को और कश्मीर को, और खास करके मैं क्योंकि कश्मीर में खड़ा हूँ, तो कश्मीर की जो इकोनॉमी है, अगर हिंदुस्तान की इकोनॉमी से हमआहंग होकर ही चलना पड़ेगा। और जैसे मैंने कहा, ये ज़रूरियात वक्त है, और इससे कश्मीर में और ख़ास करके हिंदुस्तान में टैक्स कंप्लायंस जो है वो बढ़ेगी। आज ये है कि जो भी चीज़ बिक रही है, अगर चप्पल है उसका रेट क्या होगा, टैक्सेशन का, BMW गाड़ी है उसका क्या रेट होगा, आटा नून तेल का क्या रेट होगा, ये फिटमेंट टेबल है। टैक्स की जो दर है वो तय करनी है। आज इस मीटिंग का ये मकसद है।
Today we are going to decide about the rates for every item which is used by the common man, because all the chief ministers, finance ministers of states and chief ministers under the leadership of Honorable Finance Minister we would like to ensure that the common man is not burdened and the middle class is not affected. When it comes to the richer class, they can bear the burden. Therefore, we would like to judiciously apply our mind and try to arrive at a consensus so that the common people's interest is safeguarded.
All right, before the Finance Minister begins talking, let's take it across to a battery of experts who are joining us. It is indeed a pleasure to welcome Satya Poddar, Bhavna Doshi, Rajeev Dimri and Abhishek Rastogi, all joining us right here on ET. Now, Mr. Poddar, let me begin with you. This is a very crucial GST meeting, one that is perhaps going to sit down and finally decide on fitment. But look at the kind of exemption demands that are coming in from every state. So UP wants Puja Samagri to be exempted, JNK wants exemption of handloom and handicrafts. There are other states that want exemption of cotton, silk and yarn. People want 0% tax on footwear. So plenty of exemptions warranted. I'm just curious to understand, how does one strike a balance? Because, you know, many exemptions will defy the whole idea of having a GST.
Absolutely right, and no matter how hard and how much time the politicians spend in deciding what will be taxable at what rates, I suspect that the ultimate outcome will always be controversial. Now, the problem is not taxing or not taxing a particular item. The problem is that within a broad category of items, the states want particular exemptions. Like the Puja Samagri, when the rates were initially announced, they had a very peculiar structure that if you buy agarbatti, that may be taxable at a low rate. The matches for lighting the agarbatti were taxable at 28%. The stand for sticking your agarbatti stick was taxable at 18%. So how can you have a tax structure on Puja Samagri with 4 different tax rates on the same product? If you package the whole thing together as one packet, then there'll be another tax rate altogether. So the main difficulty in deciding the rate structure is that you cannot have differential tax rate in a given category of products. Like goods must attract the like tax rate. Now all the consumer basket items, whether these are clothing, whether it's footwear, whether it's food, whether it's medicines, the governments are grappling with this concept of a single tax rate within a given basket of a particular type. And that's going to be very, very difficult. Now take the example of handloom. If the government is going to exempt handloom, and you mentioned silk fabrics, then what is left? How can they tax cotton fabrics but not silk fabrics? How about the blends of the two? In the case of chappals and shoes, if they exempt Hawaii chappals, how will they distinguish the fancy chappals that some of the more well-to-do ladies wear? And I think my hope is that the governments will follow some basic principles, and those principles are like goods, like tax rate. Now the tax rate has to be low. If the tax rate is pushed very high, then again there's a problem. Now you gave the example of the soaps, that the low value soaps will be taxable at the low rate. Now what is the definition of a soap? How can you have a one tax rate on soap, another tax rate on shampoo, a third tax rate on hair conditioners or colors and all those things? If I can also add that the most difficult task in designing the GST type tax is the rate structure. So the progress they have made, I should say that it's really worth 20% of the complexity of the GST legislation. Remaining 80% of the complexity is all about the tax rates and the base. And that's a question that is to be decided over the next day or two. And I'm really hoping that the governments will have a sensible approach in resolving these questions of rate and base, so the GST system that is implemented on July 1 is workable and is meaningful for the economy.
Right. Just hold your thoughts there. It's a comprehensive answer, but I'm going to take this across to Rajeev Dimri. And Mr. Dimri, picking up on some of the points that Mr. Poddar made, these demands for exemptions that come are obviously politically motivated, politically sensitive demands as well. So obviously coastal states want exemption on fishnet, handloom, handicraft states like J&K want an exemption on that. Uttar Pradesh, led by Yogi Adityanath, wants an exemption on puja samagri. My question to you is, A, how does the government walk this tightrope? Because exemptions will have to be given, but the trouble is, how many exemptions? You've got to be pragmatic politically to understand that exemptions cannot be completely done away with. There will be exemptions. How many exemptions is perhaps going to be prudent as well as pragmatic? And how do you differentiate between categories? I mean, how do you say that puja samagri, like Mr. Poddar was saying, I'm going to charge agarbatti at 0, but an agarbatti stand at 18%. Or I'm going to charge rubber footwear at 0 and a little high-end footwear at 18, 20, 25%. I mean, how are you going to differentiate? And he's right, and I kind of agree with him, that 20% of the consensus or the work that has been achieved is very good, but that's just 20%. The 80% is perhaps going to be done over the next, between today and tomorrow, which is arriving in the rates, always a very controversial, always a very contentious issue. You agree?
Yes, I do agree that this is going to be something that's, will be very visible, and this is where a lot of debates and classification disputes will come, and people will be fighting over this for many decades to come. But this is not the first time we are dealing with this. Even when the sales tax system moved over to GST, to VAT system at a state level, the similar exercise was done that at least the base exemption and what should go into 4% rate, what should go into 12% rate. There was an attempt to create a consensus across the country. And the same very issues were also visible back in 2003, 2004, 2005. Did we find the most perfect answer for that? Perhaps no. So some of those distinctions have been created based on the way the descriptions are. Some of those distinctions were created based on, rubber slippers up to rupees 100 will be exempt and above will be taxed at a different rate. So, yes, this is the delicate part. Yes, this is going to be very visible. The minute it is announced, these debates will happen. But I would say that we need to consider these to be some state-specific social issues. So whether fish is a staple down south and puja samagri is important for UP, in the larger scheme of things, in the larger corporate India, these are not the issues that bother them, but there will be similar things, as Mr. Poddar mentioned. How do you distinguish soap? Is it going to be by price? Is it going to be by some other description? Is it going to be by weight? And what about other complementary products? So is it soap like the bar soap, or is it the soap which is a liquid gel? Yes, they will have to be done, but the fact is that these debates have been done in the past, particularly at the time when VAT was introduced. These debates today exist in a whole lot of customs excise exemptions that are there for items of mass consumption. So debates have been there. I don't think we will find the most perfect answer, but I think we will have to move beyond them and be done with it. This is going to be debated and fought for next 20 years. This is where bulk of the debates will happen, which will get into classification disputes.
Indeed, classification disputes there, but let's get in Bhavna Doshi into this entire thing. And Bhavna Doshi, there are two views here. Satya Poddar believes these debates are bound to happen. 80% of the consensus building will all be about rates between today and tomorrow in Srinagar, and we do hope at ET now that the cool climes will help all policymakers to arrive at some sort of a consensus in that beautiful city of Srinagar. But the larger question also is, what about the other issues? I mean, where should cooking oil be? Where should tobacco be? Should tobacco and aerated drinks be, put in the same sin category? I mean, those are also things that one have to grapple with. These are obviously politically motivated demands that are coming in. I'm not surprised at all. But I'm just trying to understand. And also, we're talking on the 18th of May. Are we taking a decision too soon on rates? What if the GST going to roll out on the 1st of July? And what if it rolls out on the 1st of September? Does it give too much time to lobbies to then hanker in, press their point upon the finance minister? Too many questions there, but let's go step by step with you.
Yeah, agree with you as well as Mr. Poddar and Dimri. that this is a very crucial issue. It also has its own implications for politicians as well as all others. And therefore, there will have to be a balance which will have to be struck. And we have seen this in VAT regime. There are several products which were kept at 5%, and primarily with a view to ensure that those which are of common use or consumption by certain strata of the society, they are not taxed at a higher rate. And ideally, one would not like to see a distinction being made based on any particular, say, value or weight or things like that, because the moment you say for example, chappals below 100 rupees or below 200 rupees and above, it becomes very difficult practically to implement it for administrators. And therefore one would like to see a category wise classification. If it is chappals, and for chappals the rate is 5%, it should be across whatever are the types of chappals they are there. Maybe something is more expensive and something is little cheaper. So that's how one would like. So one would really like to see for a category a particular rate structure. Also what one would have to see is the entire chain. Because if at one stage the rate is lower and at the next stage it becomes higher, it's still okay, because at the next stage it is higher rate. But if at the earlier stage it is lower and higher and then it becomes lower, there is a problem. So therefore one would also need to fit this in. And these are all the products that we are currently talking of, where the states are asking for either exemption, and what we saw was perhaps some of them at 0%. The moment we say 0%, it means that all the input taxes are going to be refunded, so they would really become totally tax free. Whereas exemption, because some of the states have been saying keep us under exemption, some products. Now if they are in exemption, then obviously the input tax credits will not be available, so therefore some cost will be inbuilt. And therefore one would have to really see the balancing based on the entire chain. These are all the items which are basic items which are essentially used by a certain strata of society that so far we have spoken of, and they would have different considerations. Now what we see is that at the state level there were about 99 items which were either exempt, on which there was no tax. My gut feel is that perhaps these 99 items will continue to remain exempt even in the GST regime, because these were really thought through at the time when VAT was introduced, and it was after balancing the needs of different states or the specific requirements of different states. And you can't have a situation that in one state you say A is required and that's not required in B states, and therefore let's keep it in a higher rate. It will all have to be at the same rate across, and therefore though some states may have that as predominant product and others don't have, perhaps that may not be the consideration. The consideration is would be that who is using it and how is it being used, at what point or what stage it is being used.
Okay, that's an important classification as well. I mean, who's using it and at what stage is it being used? But let's take this across to Abhishek Rastogi as well. And Abhishek, one of the points that I think Bhavna made is an important point, that, you know, the exempted items, because the input credit also goes from that, what really happens to the cost structure there?
See, I think that's a very valid question, and a lot of times we've been talking about exemptions. So if we take one example of books, today we know that most of these books, whether these are academic books or otherwise, are exempt today both by the state and the center, and there are no central levies as well. Now, if from the exemption the books have to be taxed at a 5% rate, the billion-dollar question which arises now is that the printing cost, the paper and the ink would all be subject to tax. And now what happens to the tax cascading if these products would not go to the zero rate? And the expectation is that either these will be exempt or these would be taxed at a lower rate. And if the rate is 5%, then to the very large extent everything comes into the credit pool. But if it is exempted, then the cost as far as the tax cascading is concerned will remain. So I would still not call that a problem, but somewhere the government will have to take that view. And if we see this classification and the rate structure, we've been talking about it, there are about 1500 items or supplies, I would say, both in terms of goods and services for which the rates have to be decided. Now what I feel is that out of these 1500 items, about 1350 or 1400 items, there will be more or less consensus as far as the states and the central government is concerned, because most of these rates would be in line with the existing taxation rate and the structure. Now what happens to those balance 100 items? I think the debate will continue on that, and of course Rajeev mentioned it's a delicate issue, and I completely agree that it's a delicate issue. But what as industry would want, or any stakeholder would want, is clarity. So there should not be a situation where there is no clarity on the classification, and hence the classification disputes increase. So whether the rate is 5%, 12% or 18% in certain cases, there should not be subdivision of these broad categories. And hence when Bhavna mentioned about the weight being a consideration to determine the rate, or the value to determine the rate, I think that logic definitely works, and the classification or the rates should not be based on weight, etc. Because today also, as we see, that there are certain MRP based products. So for example, hair dyes, which is taxable based on the quantity, which is based on the weight of that product. So in such situations, the classification and the taxability would be disputed and challenged.
Abhishek, just hold your thoughts there, because I think the briefing is about to begin very soon, and so I'm going to take a really quick breather here on ET now. All of you please continue to be with us. We'll come back after this very short breather, continue with our discussion, and also try and see when the Finance Minister begins to talk. Okay, I do want my producers and my directors to keep hearing that audio, and whenever that gets better and there's better connectivity, we are going to go back and listen into more details that are coming in. But these are important details that have already emerged, and let's just take this across to our panel. 1,211 items have already been decided. A broad analysis says 14% are under the 5% tax slab, 17% are under the 12% tax slab, 43% of those items are under the 18% tax slab, 19% of the items only are under the 28% tax slab, which is together says 81% of items will be under that 18% tax slab. But let's take this across to our guests. Sugar, tea, coffee, edible oil, all under 5% category. Cereals and milk exempted. Coal to be taxed under 5% category. Gold and beauty will be discussed tomorrow. Satya Podar, is this along expected lines? Were you expecting the segregation to be how it has been? And the revenue implications of this will be an important subject to talk about right now.
Well, it's not so much the revenues in aggregate. What really matters is what is the distinction among these categories. For example, you mentioned, I heard the Revenue Secretary say normal tea, normal coffee will be at 5%. What is the definition of a normal tea, normal coffee? If you drink green tea or if you drink flavored teas, will they be taxable at the higher rate, or will they all be taxable at the lower rate? In case of coffee also, what is the definition of a normal coffee? So it is these distinctions that matter a lot, and only that
the ICJ has ruled in India's favor and stayed the execution of Mr. Jadhav, who's held in Pakistan's custody.
All right, he's talking on ICJ, and we will go across and get that reaction a little later on, but not pertinent to this discussion right here. So, Mr. Podar, just carry on with your point. I'm sorry to cut you short there. The Finance Minister had just begun talking, and we were getting a live feed there.
So only information we have so far is that the breakdown of these, the total consumer basket in these four categories for goods, the 14% in the 5%, 17% in the 12% basket, 43% in 18% basket, and 19% in the 28% basket. I don't think I can draw any conclusions on the basis of these revenue breakdowns. They're roughly similar to what was indicated before. My questions and my assessment of the overall rate structure will really depend upon how the individual items are classified into these categories. For example, the Revenue Secretary mentioned that tea, normal coffee, edible oils will all be classified in the 5% tax rate. Now, what is the definition of a normal tea, normal coffee? What is the definition of edible oil? There's been a lot of controversy about coconut oil. Coconut oil could be used as a hair oil or could also be used as a edible oil. Now, how will they distinguish whether a particular product is used as an edible oil or as a hair oil? And it is, as they say, the devil is in the finer details. And until those details are available, we can't really tell. But I think the message is very clear that it is not a system that is going to be very simple to comply with. This is the price we have to pay for the democratic decision-making process. It is not very difficult for the 35 governments to come to a common view, and there are significant differences across states and between the center and the states about what is a workable, simplified, normal tax system. So we have to move on with it, and good or bad, as long as we have clarity on what they have decided by tomorrow, we can move on and make the preparations for July 1. But the system will not end there. I have a feeling that it'll take few months, if not 1 or 2 years, before the system stabilizes.
You know, I think the point that you made about hair oil versus cooking oil is an important point. Rajeev Dimri, what would you say about coconut oil? I use it as a hair oil, but my Malayali friend uses it as edible oil. How are you going to distinguish, and how are you going to tax it then?
Well, so this is not a new question. This question has existed for a long, long time. I mean, as Mr. Poddar said, what we've heard is few statements, and in fact I could barely hear because audio wasn't good at that point, so I could hardly hear what the Revenue Secretary or the FM was saying. But what we've heard is just few statements. What would be important is to see how those expressions are written. I did hear some distinction between normal coffee and instant coffee. Are we going to make distinctions around on those things? And that would make it even more complicated. So we'll have to see the language, what's written, and whether all states will follow that, or will there be tweaks from one state to another. I didn't hear anything about there being any rate differences between one state and the other, which was also one of the fears that was there, that will the rates be consistent all across the state, or will there be another added dimension to that? We did hear, lots of items at the 28%, but at least I didn't hear anything as to how many items are in the 40% bracket. That would be an important one. So while there was a lot of focus and specifics being talked about on items of mass consumption or exempt items, I think there is still enough to read into what's going to be in 28%, what's going to be in 40%, and more on services, what happens to services. So a lot of more details are available, are expected and are awaited. I'm sure when those details are out, we'll be able to comment a lot more specific.
All right, I've got Mr. M. Manikam, CMD Shakti Sugars, joining us as well on the phone line, and sugar as a product will be exempted from any kind of tax. Sugar, edible oil, tea and coffee. I'm sorry, only 5% tax. What's your quick take on this, and is this a breather of sorts as far as industry is concerned?
No, I think we were expecting this to be around 5%, so I think we are pretty much okay in looking at this, because we were anticipating that we'll be put into the 5% bracket.
If I may ask you, what is your current rate of taxation right now?
See, right now I think we are paying an excise duty of about 80-90 rupees plus cane cess, so close to about 200 rupees a bag, all India. And in India, I mean in Tamil Nadu we pay another 5%, so We are at about 350 rupees in Tamil Nadu, so we'll probably go down to about 200. But for the rest of India, it'll be even Stevens because probably they will be going up from maybe 170 to 200. They'll be increasing by about 15 rupees a bag.
So the incidence of tax goes up. What does that do to the eventual costs?
Slightly, but there'll be a set-off in this, whatever they're giving, there will be a set-off in the, GST when you're selling your goods. So I think it should be neutral as far as sugar is concerned.
Sorry, could you expound upon that answer a little bit more, sir? Given that the incidence of tax may go up, what will really happen?
See, GST for the householder, okay, the price will go up maybe about 10, 15 paisa per kilo, so that's not really very much. But if you're an industry, you will have GST on the finished product, so it will be set off on the, GST that you're going to pay on the finished goods. So I don't see a major problem on the industrial consumption, and for the household, it will be a minor impact as far as we are looking at it. I think we don't see a major impact on this. 5% is what we were assuming, because they're taking away both the cane cess, sugar cess and the duty, so it'll be kind of same level of impact, not much of an impact.
What does it really do for corporate India, the GST? I mean, the finance minister has said that there will be another round tomorrow and they will try and resolve another 6 categories that are left to be fixed. I'm presuming those are the trickier ones, at least tobacco and all of that. I'm just curious to understand that meeting, and if another meeting is required, he will do a follow-up meeting. What does that really do to, your plans of rolling out GST, of meeting the GST? Do you believe July 1st looks doable, or are you more comfortable with the September 1st deadline?
July 1st is fine. I mean, whether we are going to do July or September, we are going to be as confused as ever. And the government is going to be giving clarifications every day. So, I mean, it's going to be a mess for at least 6 months. So, you can take the mess in July, or you can take it in September. So earlier the better.
So you would believe earlier the better, even though some of your peers believe that the industry should be given more time to meet requirements and to meet norms. What is the other clarity that you warrant from the GST Council? Are there any other clarifications that you're looking at this stage?
See, I don't think anybody has really thought through the entire problem. Like in demonetization, you had 80 announcements in 50 days. So I would probably expect whenever we do the GST, we'll find the problems and keep addressing them as and when they occur, because it's a very, very deep change. I don't think anybody is capable of, looking at all the issues, because the way we formulate our laws is very complicated. So this is also likely to be complicated. And we're going to have problems in handling it, but I think we will handle it. So having said that, whether you're doing it today or 1st of September or in 1st of March next year, it's going to be the same issue.
All right. Thank you very much, Mr. Manikam, for joining us on the phone line with your details and your perspective. We will continue to get you more voices. I've got Mr. D.P. Maheshwari, MD Jayashree Tea, for joining us as well. And 5% is the tax slab under which tea has been fixed. You expected this?
Yes, we were, actually we had been lobbying for free along with the food grains, but 5% was our next choice. And it's a good decision. It's a good decision.
Hold your thoughts there. I also have one of the largest FMCG majors in this country, Mr. Sunil Duggal, joining us on the phone line, CEO Dabur. Thank you very much, sir, for being with us. The incidents that we are talking about, 18% for hair oil, toothpaste and soap. The current tax rate is 28%. I'm sure there is more clarity that you're seeking. A, your first reactions on being on the 18%, how does this really impact you and the businesses? And two, of course, what other clarity are you seeking? I mean, I know packaged juices have been spoken about and some such cases as well. Shampoos, for instance, haven't still been spoken about.
Yes. Well, 18% for soaps, toothpaste and hair oils is along expected lines. I think that was mentioned earlier by the finance minister, and it's been spoken about repeatedly. So doesn't come as a surprise. Certainly is welcome, because currently the incidence of tax is around 22 to 25%. So 18 does represent a lower incidence of tax. So this will positively impact around 20% of our domestic business. Now the other part, which is largely packaged juices, health supplements, things like shampoos, skincare, home care products, we still don't know. And I think that would be something which would make a more material difference in terms of how our costs move. So we are eagerly awaiting announcements of those rates, which hopefully will happen by tomorrow.
Indeed. So soap and all of that is, say, 20% of the domestic business. The other things that you await clarity on, whether it's shampoo, whether it's skincare, whether it's home care, what part of business will be impacted by that?
Well, the balance 80% is all the other stuff, things like Ayurvedic medicines, health supplements, packaged juices, cosmetics like shampoos and skincare, home care products, air care, etc. So the visibility is very low in terms of where these products will come, particularly in the case of juices. So we do hope the rates will be 12% or below, which is the current incidence. And anything above that would definitely put some pressure on margins.
I also want to understand, when you say pressure on margins, what is the state of preparedness as far as Indian industry is concerned? Because the finance minister did allude that six categories have still not been decided today. They will try and sit down and hammer out a solution tomorrow. If that's not going to be possible, there'll be another meeting. So people are already beginning to raise questions. Can we actually get a GST going on the 1st of July? Is 1st September perhaps more feasible, more pragmatic? I mean, I want to understand the level of preparedness, and would you rather, as one of the tallest captains of Indian industry, have a GST rollout, maybe not in July, but in September instead? More clarity on the ground.
Well, we'll be comfortable with either. Our preparedness is very high. And having said that, the preparedness of some of our suppliers and some of our channel partners, downstream channel partners, still remains low. But I think the preparedness will really happen immediately after GST is introduced. So people are just waiting and watching to see where things flow, and the preparedness would happen very quickly once GST is introduced. So I don't think it will make a huge difference whether you do it from 1st July or 1st September. We would welcome an earlier introduction, because if it happens on 1st September or 1st October, we're getting into the festival season, and then the disruption in business would be magnified, because that is the peak season for many products. So we would urge the government to roll it out from 1st July, and there will be disruptions, but the second quarter, July to September quarter, is relatively quiet, so the business will be able to navigate these disruptions easier than if we do it on the 3rd.
Also, sir, I mean, I know this is not exactly a category that touches you directly, but for instance, milk has been exempted, and there's still no word on packaged juices, but informed sources are telling us that could be taxed under the 28% category because it's sweetened, because it has artificial ingredients. I'm just curious to understand, a 28% packaged juice, and how is this going to impact Dabur?
Well, we would certainly be not very happy with the 28% rate, which would be significantly higher than what we are paying today. But I think within juices, there are many categories and subcategories. Some have high sugar, some have low sugar, some have no sugar, some have artificial ingredients, some have natural ingredients. So putting all these, bundling them into a single rate and making it to say 28, I don't think is very good news for any of the players who are into the healthier beverages. So either, the beverages are separated according to the health benefits they provide, and the higher the health benefit, the lower the rate. Or the entire beverage portfolio, excluding, of course, the carbonated beverages, etc., which are basically artificial, should be taxed at not above 12%, which is the current rate. Because packaged juices are expensive in terms of the cost. The supply chain costs are very high. And already we believe that packaged juices are perhaps higher priced than what they ought to be, but that's the nature of the value chain. So any further increase in tax would perhaps make them unaffordable, and that is not a good thing.
All right, that makes it unaffordable. But the other part of this entire argument, Mr. Duggal, also is you say there are some with sweeteners, some without sweeteners, some low on sweeteners. I mean, obviously the government is not going to be able to decide on those kind of differentiations. Without those differentiations, do you believe it's a very sweeping tax rate, whichever tax rate they will fall under then? Because who's going to decide on those differentiations? I mean, somebody here said coconut oil, for instance, it's edible oil in some parts of the country, it's hair oil in the other parts of the country. How do you decide whether it's going to be in this particular category?
Yeah, I think it's not going to be easy to differentiate, and the rules will always be, there'll be some ambiguity and challenge regarding how the product's classifications happen. But my point was that penalizing juices by taking up the rate from the current 12% to something like 28 doesn't serve the purpose of encouraging people to consume healthier beverages. So that's basically the logic which we would like to apply.
All right, that's the logic you would like to apply. I also wanted to quickly touch upon some of the other issues, but of course, at the paucity of time, we'll thank you, Mr. Duggal, for sparing time and speaking to us right here at TT Now. I'm going to take it across to my other guest who's joining us on the show, a very, very big name in... okay, we've got Mr. V.S. Krishna, we've also got Mr. Challa Srishant of CCL. Is he there with us on the phone line? Because if he is, I'd like to talk over a cup of coffee, all pun intended there. A 5% tax rate, expected lines?
Yes, it is actually.
Okay. And does this change things at all as far as your business and your product is concerned?
Actually, this is going to be a good boost for us because till now we've been in the export market and we've just recently launched our brand within India. And one of the current challenges we are facing is in some states we're being taxed at 14.5% and in other states at 5%. By making it uniform at 5% now, that's going to give a good boost to the domestic coffee industry.
All right. Hold your thoughts, Mr. Chalam. I'm going to go across to Thomas Isaac, the Kerala Finance Minister, who's in conversation with my colleague Rajeev Dimri all the way from Srinagar.
So consumption data. Top two deciles consume 80% of the gold. Two, the gold prices have increased such phenomenal pace during the last 1 decade. And the market and consumers have stomached it.
Right.
Then what's the big deal about 4%, 5% tax on gold?
There are reports that many states want financial services and insurance to be taxed at 5%. Was the GST Council able to come to a consensus on this today?
Tomorrow, we are discussing services tomorrow.
Okay, and but as far as Kerala is concerned, what is your own view? Because currently a lot of services are taxed at 14.5%. In which bracket should it fall? 12%, 18%? How should things be lined up?
70% of our income is to come from commodities taxes of 14.5%.
Right.
Now, if you look at the highest rate is only 14%, not 14.5%, and that 14% would cover only say around I think less than 50%. So there has been a sharp decline on the higher bracket tax revenue.
So as far as branded goods and branded products are concerned, what is the view of the GST Council?
There has been a demand that branded products be taxed at a higher rate. So we have decided not to have a total position like that, but selectively this principle may be applied.
By tomorrow, can we expect all these issues to be ironed out and GST good to go from July 1st?
Definitely GST will come into force from July 1st. That have no doubt. But we may need another meeting to iron out some issues that may still remain.
The tobacco and BD products, that is that's also a sticky issue. Will BDs be taxed at a 28% plus?
Some of our states will never accept BD to be taxed at the same rate as cigarettes.
But it continues to be a health hazard, isn't it?
But you tax now, despite being a health hazard, while the tax incidence on BD is 1/10 of the tax on cigarettes.
Right.
Now all of a sudden you want to bring it on a par. Do you know what is going to happen? Not that people will smoke less. The consumers will shift to cigarettes. And that would mean all of a sudden about 1 crore people losing job. And I don't know if anybody can be totally insensitive to that.
Absolutely right, sir. Thank you. Many thanks for speaking to us.
Sir, a very important meeting.
All right, that's Thomas Isaac in conversation with Ruchi Bhatia there. But let's take this across to Mr. V.S. Krishnan, Tax Policy Advisor at EY. And okay, we've got the Haryana FM, but we'll go to him in just a bit. But let's take this across to Mr. V.S. Krishnan. Mr. V.S. Krishnan, 12 to 18% is largely the brackets under which most of these products are falling under. From that point of view, not much really changes. Is this positive for the industry? Mr. Krishnan.
I think what's been missed out is the Secretary Revenue made the important point that 81% of the revenue from commodities will come from 18% and below. This means that a substantial number of items have been shifted from 28 to 18. In fact, the standard rate today, if you see central excise and VAT, most of it is around 24-25%. So a lot of this is coming down to 18. So this is a big plus for industry.
Yes, exactly. That's exactly what I was asking, that this should be a big positive for the industry because most of the tax incidence is between 12 to 18%, down from the earlier 28%. I mean, in fact, I think the Revenue Secretary was very categorical when he said 81% is 81% of all items fall under that 18% bracket.
Between and below. And the other point is that what Mr. Satya Podar was saying, the confusion between normal tea and not so normal tea. The point here is a view is being taken to make a distinction between food and branded foods. So unbranded tea would be at a lower rate and branded tea would be at a higher rate. This is the decision that probably will be taken tomorrow.
Okay, so foods and branded foods, I mean branded and non-branded. In fact, I think Thomas Isaac was asked this question and he did answer that we will not take a blanket call. No, he was asked this question on branded food. My colleague did ask him a question there. But Mr. Krishnan, I just want to understand from you, if it's going to be positive for the industry, the 12 to 18% tax incidence, down from the earlier 18%, what sort of a cost-benefit analysis do we expect for consumers? I mean, how much of that will perhaps be passed on?
The point here is, many times we tend to focus on only the rate at the output end. For example, tractors today are exempt, but actually the incidence of tractors is about 12%. If you take the input taxes embedded, which cannot be offset. So in all these discussions, when we only talk about the rate at the output end, we miss out on some of the taxes which are embedded in the supply chain earlier, which are not offset because of the exemptions. So when we do an assessment of which industry gains, we'll also have to look at what's called the effective tax, which is the tax compared with the taxes before GST and after GST, taking into account all the taxes which are today not available as offsets. So in fact, exemptions may not be good at all for certain commodities.
Okay, so you're saying it may not be good for certain commodities. Let's take this to Rajeev Dimri, and Rajeev Dimri, we were having a chat about this early on. Let's keep that conversation going. The point that Mr. Krishnan is making, that incidence of lower taxes may not be good for the commodity at large because the tax incidence that we've seen before, I mean, we're just talking about the end prices, is also altered. Will you help with your view there and explain it to us?
Well, I mean, yes, it's a larger point. The point that he was making about the tractors, that by exempting a product, what you do is you stop the credit chain, and therefore all the components that are bought, which has all the duties embedded in that, that cost becomes, in a sense, economically the tax incidence, and that's the point that he was making, which is true, and certainly in its one form. But the discussion that we were having was that if, let's say, we are talking about certain products where the rates have come down from 24 to, let's say, 18%, there is certainly a margin for those industries to consider whether there is a case to, pass on the benefit to the consumer. The assumption surely being that whatever might be the incidence of taxes on the procurement side. So, for instance, we heard that they will talk about the services sector tomorrow and the rates on services. Let's assume for a minute that in select services the rate may actually go up, which is probably an expectation. But so long as that business is going to get the credit of those incremental taxes, it still will not stick to the cost. So yes, the first fear that a lot of industry had was, will the rates go up effectively for them, or will the rates come down? So far what we are seeing is, and some of your guests were describing that either they got the rates that they were hoping for, and in one or two cases actually the rates are lower than what they are. For those specific industries, there is a case where they will have an advantage, because if they continue to charge the same price, they will have a better margin. And therefore, if you are dealing in a B2B environment, exemptions are not necessarily good. But if you are dealing with a B2C environment, or a product or something that the end consumer will take, any lowering of taxes will certainly be, a good news for that industry or for that product line.
Right. Just hold your thoughts there. I've also got Mr. Harsh Mariwala joining us on the phone line, a member of Indian industry whose business is going to be immediately impacted with the rollout of the GST and the decisions that have been taken there. Most categories are under 12 to 18%. Of course, decisions on shampoo and packaged drinks and all of that still not known, but hair oil, for instance, or soap, for instance, or toothpaste, for instance, all fall under the 18% category. What's your view on this, Mr. Mariwala? How exactly does this impact businesses? And especially the ones like yours?
See, I think it's good that the government has taken a mechanical exercise in terms of what has been the current tax rates in terms of excise duty and VAT rates at the state level and arrived at the best fit, So I think considering that, it's a good moment, and I think government has been able to move fast with other states, and I think the fact that they have been able to cover so much ground today itself is very good news,
What sort of benefits do we expect to be passed on to consumers, given the fact that tax incidence is going to be lower?
See, I think we have to wait and watch, because most of our manufacturing, especially hair oils, is done in Assam, where there is no excise duty, So I think let's get the details and then decide what we're going to do about it,
Will you answer the question then on margins? Do you have a back of the envelope calculation? What does this do to margins?
Not really, no. I'm not handling the company's affairs on a day-to-day basis, so it's very difficult for me to give an answer to that question. I'm happy that the progress has been.
But you will agree, given the fact that 81% of all...
Sorry?
In fact, indeed, I think 80 to 90% of items are cleared. But sir, are you happy with the fact that about 80% of government's revenues will now come from categories that are taxed below 18%? So in that sense, GST could be a positive as far as the goods front is concerned, right?
Yeah, I think we have to wait for the fine print, but overall I think it looks positive.
What about the July 1st deadline? Because issues around exemptions and the ones related to reverse change mechanism have still not been finalized. Is July 1 now looking doubtful? Would you rather have September 1 be the
a lot depends on the government. I think I was waiting for the news on the rates. The fact that they have been able to cover a lot of ground today is very good news. I think at any point of time there will be some people who are not ready, So whether it's July or August or September, if you go on delaying it, then there are some people who will always say that, okay, I'm not ready, So at some stage the government has to bite the bullet and move forward.
The government has bitten the bullet, but two last questions before I let you go. The impact on earnings really, and the second question has to be, GST does give credibility, but does it also bring in some amount of positive sentiment? Because the rates are not
GST
incidentally
will
higher,
bring in
but
positive
incidentally lower.
sentiment from the long-term point of view because, I mean, whatever among years in terms of impact on GDP will definitely benefit branded consumer goods manufacturers. In terms of benefits, I think in the short term there may be some aberration or there may be some impact on in the short run because the wholesale channel, the distributor, there may be some stock out issues, and I think they have decided to go slow on stock. So a lot depends on that. So I think we have to be prepared for short-term aberrations and short-term disruptions. But as far as the consumer is concerned, I think the consumer will not get impacted. So if at all the trade stocks may shrink a little bit, but I think that is the price one may have to pay, and it's fully worth it from a long-term point of view.
Indeed, it's totally worth it from a long-term point of view. Thank you very, very much, Mr. Harsh Mariwala, for speaking to us right here on ET Now. We're going to get you another important voice, Captain Abhimanyu, the Finance Minister of Haryana, in conversation with my colleague Ruchi Bhatia there.
A lot of crucial decisions have been taken in this meeting, especially with respect to a lot of these products being kept at a lower tax rate. So tomorrow there are going to be, issues such as tobacco, coal. How soon can we expect a consensus, and what is the current view from the states?
See, by and large, today's meeting of the 14th GST Council had been very successful, and I see a lot of convergence of ideas in this meeting. And as far as the fitment rates is concerned, the GST Council considered the officers' committee's report, and everyone, I think all the states cutting across the political party lines and ideology, were concerned about the consumers and also a successful implementation of GST, which is minus distortions and as least distortionary as possible. So broadly, the consensus has already taken place on most of the items, but for few, which will be discussed tomorrow or in due course of time.
Items such as soaps, toothpaste continue to be in a lower tax bracket. What were the thoughts behind putting them in a lower tax bracket?
See, that was the whole idea right from day one when we started working on GST. Even when we were working as part of the GST Impart Committee, that GST must ultimately result in the low cost, at least for the low cost, at least for the common man, daily needs products and daily use products, and we've been able to work around that successfully so far. And I think the success of GST lies in bringing in the common man together, and he's the most important stakeholder for us. His participation and that he approves of it. His approval is the most important for us.
Absolutely. We heard the Jammu and Kashmir Finance Minister say that they will look to make the GST in their state more perfect by adding real estate, something that the Chief Economic Advisor has also talked about. Will we also see other states emulating this at a later stage perhaps?
See, GST Council is going to be an active body even after GST is introduced, and it is a constitutional body which will keep looking into various issues that will come up after the implementation begins, and we do expect certain challenges coming our way, and this is exactly what GST Council will be doing after we have implemented GST. So these kind of issues will do come up.
My last question, as far as Haryana is concerned, how ready are we for GST implementation?
Absolutely ready. We can start it tomorrow.
All right, on that note, many thanks for speaking to us.
All right, Captain Abhimanyu of Haryana says they can roll out the GST tomorrow and they're absolutely ready with it. But let's take this across to Abhishek Rastogi, and Mr. Rastogi, the question also has to do with the fact that the government still has to take a call on branded versus non-branded food items, and that's going to be, again, a very tough discretionary call as well, one that is perhaps going to be deliberated and decided upon tomorrow.
I think certainly the distinction between the branded and the non-branded goods would make a lot of difference to the entire scheme. And if we see that there are still 19% of the items which are covered under the 20% rate, which means that about 230 goods would still be covered under the 28% rate. So let's not undermine that percentage. And the second comment which is related to this is with respect to the 12% rate structure. And if we see that there are only 17% items which are there under the 12% structure. So the billion-dollar question again which arises is that was there a need to have two rates of 12% and 18%, which we've been talking as standard rates? Because while most of the products, like 43% of the products are in the 18% category, only 17% of these are in 12% category. And we've been talking about multiple rate structure under the GST regime. So, would it have been a better situation to had maybe 16% rate and all of these 60% items coming under the 16% rate? So that is a big question to be asked, that will this additional 12% category rate would add more to the disputes and the classification issues, or will it balance the entire tax structure? And of course we will have to see the details with respect to the 28% tax rate as well, because about 230 items would be in the 28% rate.
$230 items under the 28% rate, only 17% items under the 12% rate. But you're right. Will this add to disputes is the big question. I'm going to first pose that to Bhavna Doshi, and then of course I'm going to take it forward with my other panelists. Bhavna?
Yes, certainly there will be, because today we haven't heard anything about what are the products that they've put under 12% category. For services, we've been hearing that there will be some services which would be classified under 12%. But for goods, today we didn't hear anything. They were talking either about 18% or 5% or exempt. And certainly this branding and non-branding would be an issue, goods which are branded and non-branded. And take the example of tea that we were talking about earlier. Perhaps, and when the Revenue Secretary mentioned that it will be the normal tea, perhaps what he meant was the tea which is sold loose, possibly, and therefore anything which is packed which has a brand may not come under the 5% rate, or any the tea like instant tea, what we are talking about, instant coffee. So there will be this issues and challenges, and we will really need to see details to understand as to how this whole classification is going to work. We also spoke about coconut oil being used as a food item, a cooking medium, or as a hair oil. And then today we heard that they have a category of hair oil. Now hair oil again could be any hair oil. So somewhere the classification is based on the use, and in fact when we heard about the coal, coal also is, if it, there was this issue whether when the coal is used by power generating companies, how would the tax be borne by them, because they are outside the GST net. So there the council has taken a decision that it would be 5%. So instead of creating any distinction based on the end use, they have taken a decision that the rate will be lower. We'll have to see how it's been done for other products.
Right, just hold your thoughts there, because I've got a market voice on a big one. Deepan Mehta, member both BSc and NSC, is joining us live right here on ET Now. Thank you very much, Mr. Mehta, for being with us. You must have heard broad details of what the GST will look like, and one of the things that most people in Indian industry are reading at least is the tax rates will be in the lines of 12 to 18% majority. In fact, 80% of all government revenues, rightly pointed out by Mr. Krishnan there, 80% of all government revenues will come under tax rates of below 18%. How do you read this for Indian industry to begin with?
I think it's extremely positive, and what we are seeing is the broad rate or the top line rate of 18%, and then obviously they get the set off also of GST on the goods and services they consume. So net taxation would be lower than 18% also, and that's certainly very positive. And I gather that FMCG is not a major beneficiary, and I think it's great because FMCG consumption was now middling to around single digit or low single-digit volume growth, and now with lower prices, hopefully, that could see as a catalyst for higher volume growth over there. So I think very positive, and one more uncertainty also getting dealt with over here, and now I think it's more and more likely that the July 1st deadline may be met. And although there would be some disruption, but it will go a long way in improving the overall volumes within the industry and the economy. At the same time, I think there will be major benefits in terms of transportation costs, logistic costs, as well as production planning.
So besides the transportation cost and production cost and all of that, the fact that the GST is also a sentimental booster of sorts, given the fact that the tax incidence for a lot of these items, I mean, I know 230 items are still in the 28% category, but the tax incidence at large for all of these items is low, is between 12 to 18%. Is that also an added positive? I mean, not just a sentimental positive, but a more factual positive really for Indian industry, for markets tomorrow morning?
Yeah, absolutely. I think that lower prices will drive consumption higher, and that certainly is positive. And also, indirect benefit could be in terms of lower inflation rate, which could perhaps egg RBI to reduce interest rates. So there are many benefits, and hopefully, I think the government is banking on higher volumes to cover a shortfall, if any, on the indirect tax front.
Okay, a very quick question also. I think Mr. Mariwala spoke about impact on earnings and margins. What's your view largely? How will this GST roll out, and hopefully it's going to happen by the 1st of July now, impact some of the big FMCG majors and of course other players who GST will impact eventually? I'm just speaking from a margins and earnings point of view.
I think the biggest benefit will come in from volume growth, and therefore the operating leverage will start kicking in for many of the FMCG companies because typically they have very high operating leverages over there. So that's one major advantage which will come to the FMCG companies because as I understand that they are unlikely to retain any reduction in the taxation. So the gains have to come through better operating leverage. Sorry.
All right, gains come from better operating leverages, but you spoke about a volume pickup, and one of course will see impact of the GST when rolled out a couple of months down the line. A GST on the 1st of July will have an impact a little later. By when do we see that volume pickup? And is that again going to be a big booster for earnings, because earnings has been such a bone of, albatross, the Achilles heels for most corporates listed in India?
Yeah, I think the season will start post monsoon. That is when I think we should see a significant uptick in consumption because by then all the initial teething trouble with GST would have been done with. The monetization is already behind us. So this particular busy season, which generally starts after the monsoon from September, October, all the way to December, Jan, will be the key season for a lot of companies. And hopefully the monsoons are good. That will be an added benefit for rising consumption, domestic consumption. In India and stock markets in India, the major investment theme which a lot of investors are focused on is rising consumption. And GST, good monsoon, hopefully maybe even lower interest rates. I think all of this does get a boost. And that could, support valuations which are presently at slightly, dangerous levels.
A quick question then, and that's the last one before I wrap it up with you, Mr. Deepan Mehta. You say lower inflation is going to be again an added advantage of volumes picked up and prices falling. The market is expecting a rate cut, and that's not just coming on the back of good monsoons that is going to perhaps lower inflation. Is this an added cause that the markets will cheer, given that is this going to add to the whole build-up around a possible rate cut?
Yeah, RBI has gone into neutral mode, but hopes are always there of a reduction in interest rate if the data on the inflation front is positive. And there was a fear that perhaps GST could lead to an increase in inflation. But now if the tax rates are low, then that particular situation or problem may not arise. So you could hope that maybe in a couple of months, 3-4 months down the line, once the GST is in place, you have a good monsoon, and if inflation does drift lower, then you could have a more easy monetary policy coming in from the RBI.
All right, thank you very much, Mr. Deepan Mehta, for joining us right here on ET Now. I'm going to take this question quickly to Satyapodar and then get Mr. Krishnan in. We'll just keep it a little macro right now. I mean, look at the kind of commentary that's coming in from the markets or corporates at large, who all believe this is going to not just add to volumes, this is also going to add to, better margins. This is going to bring down costs, as a result, rein in inflation, set the stage for an RBI rate cut. Is Indian industry and especially our Indian markets cheering a little too early? Because the impact of GST, there will be short-term pain. The gain is only long-term. Are we kind of hoodwinking, and are we not looking at the short-term pain just yet while we discuss all of this?
Well, if I could comment briefly, first of all, if the GST is going to be revenue neutral, by definition it has to be price neutral. So even though some prices may come down, others may have to go up if the government has to collect the same revenues as they do from the current system. I don't expect the revenues to take a big jump up simply because of improved compliance. If there is to be improved compliance, it will come much later in the time period, not at the beginning of the GST. If anything, GST is going to take a bit of a hit on revenue side because government is going to be given transitional tax credits. So the fact that for 40-50% of the commodities or even 80%, tax rate will be lower than 18%, I don't think I can draw any conclusion whether it implies a net cut in the tax rates or the tax burden for the consumers. Because if the revenues from the GST are going to be the same as from the current system, there cannot be mathematically any cut in the tax burden on the consumers. So something has to give. Now that could be the tax rate on the services, or even the weighted average tax rate may not be much lower than what it is today. That's point number one. Point number two is that in the case of GST, the impact on the economy will not happen. We are definitely not in an ideal type of GST. We are simply in a second best model for the GST. It is going to be complex. It is not going to be smooth at the time of transition because of the automation required, which will require certain amount of preparation. So my hope is that on July 1, the best that we can expect from the GST is an economic neutral GST, which doesn't do any damage, doesn't cause any disruption. And on that basis, I think industry is out really saying, let's get on with it. We've waited long enough. Good or bad, at least remove the uncertainty so we can plan our business activities for the future.
Okay, I've got Mr. R.S. Sodhi, the Managing Director of Gujarat Cooperative Milk Marketing Federation. Simply put, the man who is all about Amul. Thank you very, very much, sir, for being with us. Milk is going to be exempted as far as the GST is concerned. I know you lobbied very hard and you've written columns and you've been making your case rather vocally about milk being taxed lower. Are you a happy man today, and are you still grappling with the uncertainty that while milk is exempted, what about products like ghee and some of those value-added products?
Well, let me tell you, milk, curd and buttermilk already exempted in all the states under VAT. So milk exemption is not a new thing, it's already exempted. But I'm very happy to see that tax rate, GST rates are most of the food items like sugar, tea, coffee, edible oil are lower. So it's very good. And I think the GST rates are not only anti-inflammatory, but it will reduce the prices to the consumer and it will increase the consumption. I think till now, whatever I have seen on the TV, it is very, very positive. But still we have to see the fine print, what exactly is going into. Because when you are losing so much of revenue in personal product like hair oil, toothpaste, soap from 28 to 18, from where you are going to make up? That also we want to see.
Are you apprehensive that while milk may be exempted and white curd and chaas, like you rightly said, is an exempted category all across Indian states, are you apprehensive that milk powder, baby food and ice cream, which currently attract a tax rate of anything between 10 to 12%, could be taxed higher? Is that an apprehension that you share at this stage? Because an explanation hasn't come right now on that.
I think dairy products are right now taxed across various states 5 to 12%. Some ghee, butter, powders are around 5%, ice creams and other cheese, etc. at 12%, and whatever, I think it will continue at the same rates. There should not be any increase. Even other products are, there's no increase in the total tax rate. Why dairy products tax rate should increase? Because if there is any increase in tax rate in dairy products, either farmer has to lose money or consumer has to pay more.
When you say farmer has to lose money, are you essentially saying it's discouraging for the producer given the high cost? Will you help us explain that?
No, I'm not saying that farmer, if it is more, right now it is not more. Till now whatever rates have come on the TV or in other media, there is no increase is coming. So I don't see there is going to be any loss to the farmers or more price to the consumers.
Okay, will you help us understand what is the present rate of growth as far as milk in this country is concerned? And do you believe an exemption that stays? I know it was an exempted item across states, whether it's milk, white curd or chaas as you said, but given the fact that the GST will continue with that exemption, we still do not know value-added products like ghee, we do not know what happens to baby food and you know, powdered milk. We'll come to that when the council does decide upon it and elaborates it further. But what does this really do to consumption patterns across the country? And in turn, what does this do to growth? Because the reports that I've been reading, consumption has grown by only what, 4.5% of milk all across the country?
No doubt total milk consumption is going at the rate of 4.5%. But if you talk about branded or packed milk, it is going at the rate of around 10 to 12%. So it will further, now if we continue in GST also zero rate, I think consumption will continue to grow at 10 to 12% in branded or packed form. And I think in other dairy products also when 5 to 12% taxes are there, so it won't curtail the demand and the growth will continue.
Is there at all a quick back of the envelope calculations that you've done in terms of impact on margins, if at all, impact on your top line, impact on profit? I mean, I'm just trying to understand, is India Inc. doing these back of envelope calculations given the news that's coming out of the GST Council in Kashmir?
No, till now there is no impact, neither negative nor positive. And as far as profits or margin is concerned, in Amul or cooperatives, we do not keep margins or bottom line. Whatever we get from the consumer, we pass it on to the farmers. So there is no question of any reduction or increase in the margins are concerned.
Who's our live guest? All right, Mr. Sori, we really appreciate you taking time out and speaking to us right here on ET Now. This is Amul's first reaction after the GST rates are out, at least a large part of them. Milk has been exempted and Mr. Sori is not complaining. Thank you very much, sir, for being with us. If my director can tell me, do I have Mr. Sanjay Dutt on the phone line with us to just get a quick markets perspective? And if I do, okay, I'm going to go across to him in just a bit. But Mr. V.S. Krishnan, you're smiling. Amul says they do not, and they're not still clear about butter, they're not clear about ice creams, they're not clear about powdered milk, they're not clear about baby food. These are the discretions that one is talking about. Yes, milk is exempted, but what about the rest of the basket?
Now, just to make the point about revenue, I think the finance minister made a very interesting point. He said although the rates are going to come down, he expects revenues to be buoyant because of better compliance. Now better compliance is going to come mainly from the trading segment of the value chain. And although revenues GST revenues may not rise so much, but on the income tax side, because traders declare more of their transactions, the gains will also accrue from the direct tax revenues. So, which is why the FM was making the point that if you look at tax revenues, both direct and indirect tax together and the GST impact on the direct tax revenues, the revenues will be buoyant. Because in the trading segment, you will find compliance going up, because today the trader will get much more credits than he got today in terms of tax credits on input goods and input services and even on imported inputs. So revenues are definitely going to go up due to better compliance even in the short run, and this will get reflected a lot on the direct tax revenues, because the registration number of the indirect tax, every person working under GST will have to get a GST number, which is a 15-digit number, which has the income tax 10-digit PAN code embedded in it, which is why the direct and the indirect tax bases would be related. So a lot of revenues will also come on the direct tax side. That's the first point. Second point on your thing, I think a lot of branded products may go into 12%.
That's right. I think what Amul was referring to is the branded products, and that is what they're concerned about. But thank you very, very much, gentlemen, for being with us. Rajeev Dimri, Abhishek Rastogi, Bhavna Doshi, Mr. Satyapodar, Mr. V.S. Krishnan, and everybody else who joined us on the phone line. Thank you very much for being with us. We're going to get you a big voice here on the show now. And I'm going to toss it across to my colleague Chandra or Shrikant to take that conversation with Vijay Shekhar Sharma of Paytm forward.